Hello guys, this is FairBinaryOptions.com, and like the name of this analysis points, we want to buy call options on EURGBP compound for an X wave to come. Now this X wave should come to the upside, and normally it should be a corrective wave. This corrective wave meaning it can go in the form of an ABC, and this ABC most likely for X waves that should go and make a new high. This ABC should be in the form of a zigzag. Now I would say that this is going to be a normal zigzag, and this is established by looking at the structure of the C wave, meaning that the C wave needs to be between 61.8 and 161.8 when related with the length of wave A. So I would say that this is going to be a nice and normal zigzag, but mandatory to break these highs here. The reason for that is that the move that starts from the lows, from here, and to the upside seems to be an impulsive move with a first wave extension, and this to be labeled like this. So this to be the first wave here, something like that, one. Let's say something like this. And the second wave, and the third wave, and the fourth wave, or probably like this, and then the fifth wave. So 1, 2, 3, 4, 5. And after this five-wave structure, we should struggle to find, let's say, a second wave if possible, or a corrective wave that should go for the second wave, because we said that this is a five-wave structure. Well, because of that, what I'm looking here is not for a second wave here, because this second wave is retracing simply too much out of the previous wave. If you take a Fibonacci retracement and you look at the retracement level from the highs to the lows, you are seeing that this one is retracing way below the 61.8, and from my experience, whenever this is happening, then usually it means that the price structure that you are looking for, it is not a second wave. So I would say that our first wave of a bigger degree would be the end of this move here, 84.66. And then of course, in the second wave should be not here, but after this X wave to the outside of a bigger degree, we are looking then for a second wave to retrace, or this one to be part of a running variation of something of a second wave, and that means that the second wave will retrace little of, or if any, out of the previous wave. So to look for something like a second wave here. And the move prior to that area should be labeled as this being a zigzag, this being the first wave, wave A, this being a second wave, and this being a third wave, or a C wave, A, B, C. The move to the downside to be completed, I would say not here but here, and this would be only the first correction. Now it resembles also with a flat, so it might be that this is wave A to the upside, a B wave that goes like that, and then to look for a five-wave structure. So if this move to the upside to make a new high is going to be a five-wave structure, then we'll redo the math, and probably this will be interpreted as a corrective wave in three waves. But if it goes like a zigzag, then this must stay like a five-wave structure, and that would be the logical thing to look for. So what next in conclusion? Well, in conclusion, we would like to buy call options. 82.96, as you can see here, price is hovering around this area from this last, let's say after the New Year's Eve, so after the start of the 2014. So we would like to buy call options in this area, with expiration date being end of week expiration date. End of week this coming Friday. So buying call options with end of week expiration date 21 GMT on Friday. This is what the market is, let's say, is supposed to be played based on the analysis we have here. So buying call options 82.97 with the expiration date, end of week expiration date. Any broker that respects should offer you this expiration date 21 GMT this Friday. This coincides with the moment the US markets are going to be closed. So thank you very much for being here. This is fairbinaryoptions.com, and all these analyses are possible due to the help of our general sponsor, Lioneye.